Watching millennials describe themselves as, get this, according to a new survey, self-absorbed, wasteful, greedy. That's according to a new poll. But former NFL tight end, Super Bowl champ, and Movement Mortgage co-founder and CEO Casey Crawford, who joined me last hour, says that's not stopping them from buying homes.
You know, we've actually seen millennials entering the marketplace in a big way over the last couple of years. And, millennials are actually making $78,000 a year on average as buyers, and that's really helping them enter this home buying market.
So they have the money to buy a house.
They do. 25% are still getting a loan from mom and dad, so there's still some of those phone calls.
All right, Casey Crawford with more. I want to bring in the CEO of Third Federal, Marc Stefanski. Good morning, Marc. Good to see you.
Good morning, Maria.
Thank you so much for joining the conversation. So you're seeing a mixed bag when it comes to millennials. I want to get your take on the broader mortgage market right now. So tell us what you're seeing.
Sure. Well, 3 out of my 5 kids are millennials, and they are all in apartments. They don't really have any interest in buying a home right now.
Yeah, so it's a discrepancy. Okay.
Yeah, a little bit. And I think that it's a major market, and you're seeing a resurgence of some of the inner city development, especially in Cleveland, for example, where there's thousands of apartments that have been built, and they're all being filled rather quickly. So
put millennials aside. How would you characterize housing right now?
Well, it's still very slow. The purchase market is very, very slow. Depending on the market, depending on where you are geographically, across the U.S., I think you've got some markets in and around D.C. and even here in New York and North Carolina that are doing very, very well. But for the most part, it's rather slow across the country.
Why?
I think consumer confidence just isn't where it needs to be.
One question. With your 3, I realize it's only anecdotal, but have they started families yet, or are they on their own still?
As far as I know, they don't have families.
Because I think that's an issue. You know, back 10 years ago when the very first thing you had to do when you got out of college, you weren't a success unless you bought a house. That's gone away now. And people, I think, are being more sensible about it. Like, you really don't need a house as a single person. You need an apartment. And there's more young people around you, and that's a better place to be. And then once you have a spouse and 3 children or 5 children, then you need a few more bedrooms.
Yeah, it seems like that folks are getting married a little later.
Yep.
I want you to connect the dots for us, though, because we're all having this conversation about the jobs number coming out, what that means for the Federal Reserve. You say consumer confidence is just not as strong as it should be.
Right.
The housing market's okay, but there are pockets of strength, but it's not an off-the-charts great story.
That's right.
So how does that jive with what you're saying, Phil, that things are improving?
Consumer confidence, looking at the 2 government metrics, the Conference Boards and the Michigan Sentiment Index, we're sitting at post-recession highs earlier this year. So from our perspective, the confidence has improved. What we're seeing in terms of the millennials is there was an economic problem. These kids, over the last 5 or 10 years, graduated from school, couldn't get a job, had $30,000 in school debt. So what would they do? They'd move back in with mom and dad and sleep in the basement. I don't know if you were experiencing that. But in the last, year or so, the job prospects for these kids have improved. They started to get jobs, and suddenly the household formation numbers have gone vertical. So it seems as if they're sort of getting on with the delayed gratification of their life. They're going to apartments. Maybe they get married, start having some kids, and then we start to see maybe the purchasing. So the cycle looks like it's elongated, but I don't think it's completely eliminated.
Yeah, that's true. But we could use another stimulus from the federal government.
Is that what you want? You think in order to get the housing market really sustained?
What kind of stimulus?
Yeah,
monetary
or
fiscal?
Well, we're talking, if you go back to 2008, there was a $8,000 tax credit for purchases of homes. And we experimented with that just recently and gave $1,000 back to our customers who were buying a home. And our market share went up by 40% in our immediate market.
I think all taxpayers will agree, though, that you're welcome to do that as a private business, but
sure,
we're not going to fund that as a federal government.
So you want
we did it once already.
You want more fiscal stimulus.
And back then,
the economy's not weak like it was in 2008. Come on, man.
I don't know. That's debatable.
That's it. So you think it may be? Are you comparing this to 2008?
I don't think we're seeing the recovery that we could, especially the consumer confidence just isn't there.
Do you want the Fed to raise rates in 2 weeks?
I think to me it's a so what, because if they raise the rates, it's not going to be all that much. They're going to send a signal across the world, across the country and in the world. But if they're going to raise it dramatically, it's going to be a mess.
So what do you do? I mean, as a company, do you grow through acquisitions further?
No, we don't.
No.
Well, one customer at a time. So we do grow that way.
Marc, it's great to see you. Thank you so much for joining us.
Thank you, Maria.
We appreciate it very much. Marc Stefanski there.